Hey everyone, Anthony Venuto here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to talk about mortgage renewals, payment shocks, and what you can do to better prepare when your renewal comes around. Stay tuned, you don't want to miss it. Mortgage renewals are an integral part of the mortgage journey and for many Canadians, financing when it comes to their home. And in this current market, with things changing so rapidly, it is more important to think about that mortgage renewal ahead of time than it is to just leave it and let it go, especially for many Canadians who are approaching those renewal dates. Those Canadians that may have originated their mortgage in the latter half of 2017 and even early 2018 will be approaching their renewal window very shortly. And there are going to be several options to help Canadians keep more money in their pockets. And this is a very important conversation that we're having with our clients, as well as something we want to convey to our viewers and our consumers. Because if you're going to let that mortgage renewal simmer, it could mean differences in rates and cost you even more money. Already in the current moment, as we're talking to clients real time, they are seeing that their mortgage contract rate that was issued maybe a few years ago is doubled in the current marketplace. And obviously this leads to a big payment shock when you look at the monthly household expenses for many Canadians, especially as things are getting even more expensive. Now, looking at these different elements, it's important to look at what it can cost you for a mortgage in this marketplace, because maybe you got your mortgage when there was no stress test. Maybe you're renewing and the stress test has changed, which it has. And obviously the qualifications have become more stringent. Now, if you're looking to find out a little bit more information and play around with numbers, especially to determine the differences between what you were paying and what you could be paying, make sure to download our app in the description box below. And you can play around with some of those numbers and compare your actual mortgages and existing rates that are being offered right now and see what those payment differences will look like. And on average, we're seeing about $500 to $1,200 differences, obviously depending on the size of the mortgage, the rate of the mortgage, and obviously the amortization. And we'll get into that a little bit more. So obviously, just to do a quick recap on why we feel this is a very important topic for clients that are approaching that window, is that maybe your branch has reached out to you, maybe your bank has reached out to you, maybe you haven't heard from your broker. You need to get ahead of that information so that you can make sure that you're going to get the most aggressive rate offered in the current time. Now, obviously, there are possibilities that interest rates can change in the near future, but with everything that we see happening, whether that means the Bank of England and the UK gilt, as well as what is happening potentially with another 2008 global financial crisis that could be looming with Credit Suisse, all these different types of changes with anything happening in the Ukraine as well as Russia, all these things are basically making the bond markets and their yields change drastically. Whether it be up or down, it is important to understand that there are changes in our financial system. And we talked about the Bank of Canada continuously increasing its policy rate. It has done so over the last 7 months, and it's not planning on slowing down anytime soon. We are anticipating another increase on October 26th and once again in December. So if you have a variable rate mortgage, you might have already seen your payments changing over the last few months. And if you haven't seen your payments change, that means you're probably in a static or fixed rate variable product. With these changes though, it could mean that you're going to approach that trigger rate anytime soon. And I know a lot of correspondence has been going out to many Canadians, something we talked about last week. So if your mortgage is coming up for renewal or it's approaching renewal, what should you be doing? And as I mentioned earlier on, it is important to get ahead of it, especially if you're 90 to 120 days out. Don't wait to the last minute where you're not going to give yourself enough time to actually get a good rate. So let's talk a little bit about the renewal and 7 things that we see or we're advising our clients to consider. So let's start off with the word renewal. What did we decide, or how did we break down the word renewal into 7 different ways to consider what you should be doing? Number 1, revisit your options before your actual mortgage renewal comes up. Why is this important? Because as we touched upon, it's very important to get the most aggressive rate and product that is available to you at the current moment. We don't know if lenders are going to be changing their guidelines There are ratio exceptions down the road, and I can tell you this, it's happening. Lenders are getting a little bit more stringent and more picky with the deals that are coming across their desk. Equity. Equity is an important part of the actual renewal process because it could mean renewal or refinance, depending on your situation, on your debt load, and the hopes and dreams you have for that home and your family down the road. Choosing the right option will absolutely help keep more money in your pocket. And I'll explain. If you're looking at the home and you've appreciated over the last 5 years, you may have access to significant equity. And you might be with a current lender that doesn't offer you a line of credit. And maybe you're searching for a line of credit, or maybe you're looking to pay out some debt and you need to switch to a different lender. When that mortgage renewal comes up and the day that it expires is the best time to switch over to a different lender, as the cost will be very little or none at all, as we have products that are called switch and transfers. Now, it's important to understand the difference between a refinance and a renewal or a switch. A renewal or a switch product to a different lender at a maybe more aggressive rate only means that you're keeping the mortgage and the amortization the same, and you're just taking that exact mortgage and re-registering with a new lender at a better rate. If you're looking to refinance that mortgage, it may mean additional costs, depending if you're looking to re-amortize back up to 30 years, or if you plan to stay at 25. Obviously, it has to fit the bank's guidelines, whether it's insured, insurable, or conventional. And we did discuss these options in another video. But obviously, if you have questions about that, reach out to your mortgage broker or bank for more information. Now, N, negotiate or new lender. This is a very important conversation to have because for some Canadians, they might not be able to leave to go to a new lender. They might be required to negotiate with their existing lender. And the reason behind that is if you find yourself in a situation where your income has changed significantly from the last time you got approved, and you're not showing as much, or maybe you've switched career paths, or maybe you're not working at all, or maybe something has changed significantly, you might not be able to qualify to switch over to a new lender, because if you switch over to a new lender, you do need to requalify. Even if you're switching and renewing with the exact same mortgage amount and amortization, you must requalify. If you want to stay with your existing lender and not have to worry about requalifying, then you would just renegotiate with the lender and whatever rate they're being offered. So there is that difference between negotiate and new lender. And then we move on to the word E, evaluate. Evaluating your actual situation and the current market. And something we touched upon earlier in the video is evaluating what is happening outside financially, things that are not necessarily in your control, but you actually can see what is happening right now. So clients that may have had a mortgage for 10 or 15 years, when renewal came up, maybe the economic conditions, the real estate market, the mortgage rates were not too far off from where they had originated from. But now with the current market, things are getting more expensive. And as I mentioned, clients may be doubling in interest rate, creating that payment shock. So evaluating your situation, your budget, and your finance is very, very important, especially if you're deciding to go either 1 to 5 years. A lot of times clients might say, hey, rates are too elevated right now for me to lock in for 5 years. Some clients might say, hey, because I'm in a fixed rate and I'm planning on moving or planning on refinancing, but rates are too high, I might just ride out a variable for a short window. Or it might be, hey, I want the best of both worlds. Let me take a 1 to 3 year product. Now, just an interesting point on that actually is because with everything that's happening right now, 1 to 3 year mortgages are almost the same price, if not greater than some 5-year products being offered in the market. Now, obviously things change and that can obviously change at any given time, but it's important to understand 1 to 3 year options and 5-year options might be on the same playing field. W, work towards a budget and goals. Now, obviously in this renewal process, it's important to revisit your goals and your budgets and understanding exactly what it is that you want to do with that mortgage over the next contract. Whether it be 1 to 5 years, you want to pay down the mortgage a little bit more, then you have to set up that plan. If you want to increase your payments, this might be an opportunity to revisit your monthly income. So obviously working towards that mortgage and understanding exactly what that lender and the product being offered allows you to do when it comes to prepayment privileges, payment top-ups, it's very, very important. A, assess your financial and home policies. This is a very important part of the journey every 5 years. Sometimes you're getting your policy every year for your home insurance and your auto, and you just sign back. But obviously, shopping around and getting home insurance and auto insurance is very important. And at that 5-year mark, it's critical to relook at if you've done any work to the home and you need to increase that policy coverage, or anything has changed significantly. Like maybe when you purchased your first home, you didn't have a family, now you do. And now you might be considering purchasing life insurance or getting a will in place. That is a good opportunity to do it when you see your renewal notice or when you're thinking about your renewal. And not to mention revisiting your investment portfolio. If you have a portfolio, it is a good time to rejig or refocus on your actual investments. You'd be surprised how many times we talk to Canadians about their investments when they're asking us about their assets and we're talking about those things, and they have no idea what they're really actually invested in. And that can be scary, especially in this time where markets are constantly changing. And finally, limit, L for limit your liabilities. This is a very important conversation because many Canadians with higher household debt loads are basically feeling the pressures with higher cost of goods and services. And basically conducting that budget, as we talked about, and reducing those liabilities, whether that means cutting up credit cards, reducing your lines of credits, and trying to reduce your exposure to temptation or risk is very, very important, especially if you want to work towards those goals of paying down that mortgage and not tapping into equity into your home. So obviously right now is a very good time when that renewal comes in to start to revisit all these items, as we talked about 7 different things that you should be considering, especially if you're planning on renewing that mortgage. Now, once again, if you're planning to renew, switch to a different lender, or you're looking to get a different rate or an option, definitely feel free to reach out to us here at In Touch Mortgage Solutions. And if you think that this video will help someone who's in the renewal process, or you know someone that might benefit from this content, please don't be hesitant. Please share the video. And while you share the video, don't forget to hit the like, share, and subscribe button and that notification bell so we can push this content out to as many Canadians as possible. But we will leave the video here, and we hope everyone enjoyed the content. Wishing everyone a great Friday, and until next week, we'll see you then. Have a great weekend.